Hello, Warriors. Good Fed Day. Hello, Arena, Galaxy, Sinatra, Hugo, Kevin. How are you, buddy? Ren, how's it going? Okay, so we're going to see if the Fed can save the markets here, or if people are going to front run, sell in May, and go away. So let's take a look. One thing I do want to point out is that NASDAQ did not make a new high yesterday, day before, I mean. See, this was a failing rally here, not by much, but has failed pretty lousy action compared to the S&Ps, which made a new high just over the big round number of 4,200. If we close under 4183, we'll have a 2-week reversal. So this is the next 3 days, I think, are very important. Here's your weekly. So all you do is count back a couple candles, look at the RSI structure in S&Ps compared to a much weaker structure in NASDAQ. Hello, Marco, Shahab, Sa. How are you? Everyone notice a difference in the RSI structure here on the weekly even? Much stronger S&Ps. So it's been going on for a while. The relative weakness of NASDAQ. Microsoft had great earnings, but under a lot of pressure. It was down 10% in the aftermarket yesterday, while Google was up 4%. So they both went in opposite directions, but you could even see it right here today in NASDAQ. Look at the 4-hour. As long as we stay under this level right here, it looks like we're sitting right on a cliff here. Back under, say, 13,900 could make it pretty vulnerable. And we're under the off number here by almost 100 points. The off number in NASDAQ was 14,000. This weekly candle right here, 14,038 and a half. So you can't call it a victory till Friday because we're talking about a weekly reversal. You don't know if you have a weekly reversal until the week is done. But the market entered that period that Norm Linsky talked about, and we may have peaked. I'm just saying it is a possibility. If not, we're going to run to, at minimum 4220 and maybe higher targets 4300, maybe even 44, which then, of course, the NASDAQ will make a new high. You have the dollar up a little bit here today. I was looking at the dollar, bought it on Monday and covered a lot of stuff yesterday. And I wanted to show you guys this, okay? So let's say that the Fed can give us one more goose in the market, one more break in the dollar. What are we going to have here? 1, 2, 3. And it'll be coming in, maybe 90.60, 90.55. If we take it down there one more time, that's going to look pretty much like a 3 on the 4-hour time frame. You could see even on the drive 2, we're above 30, right? Okay, so we'll see what happens with the dollar. If if the Fed's successful, we should get another new low in the dollar. I'm going to fade dollar weakness here in the next couple days. I did it Monday. And say, for example, the euro pushes up and takes out these highs, I would view that as a shorting opportunity. Okay, cable, kind of looks like it's flagging here, and you had the clue on Friday when we had this candle here. All right, that's when gold put in this candle here. So the yen has been a rocket ship, right? Pretty good, 150 pips in since Friday. And so for gold to hold together, you need a pullback here. And when I look at silver, which has been outperforming, I thought we might get one more drive up here in silver for a 3, but now it's looking like almost a little bit of a head and shoulders, or this is a failing rally, and we're right at major support at 25.80. And we start taking it out, you have 25.50. Take that out, you have 24.50. I think there's a chance that there could be one more shot down in silver to clean out this low, maybe towards 23, and then you back up the truck, 23 to 22. So those are my views. Any questions on my views? Oh, okay. Good question. It's a triple bearish ETF on the NASDAQ. So here's the way it looks. All right, that's your daily. All right, so some shorter term stuff. We made a marginal new low because, you know, there's a little bleed that goes on in these leveraged ETFs, but very possible bottom here. And that's the price of it. And I like it. I own it. I have calls. $12 calls is what I went with. And here's my target. If I'm right about NASDAQ, I think we're going up to near 20. Log doesn't work. Auto. Okay, so you look at this, you have some moving averages at 22, and it doubled on the COVID crash. Yeah, it doubled on the COVID crash. It went from 75 to 150. But what I wanted to show you here is the target up around 22, which I'm having a hard time finding. But there's also a gap up there at 22. Let me move you guys around here, over here. Okay, so there's a gap. So it would basically take NASDAQ back to around the November levels, around 11,000, about 3,000 points lower to get up to this 22 level. So that's how another way that I'm playing it. And that's what SQQ is. Okay, Sansi, VIX isn't, you know, and I looked at VIX and we'll see. I still think you need to close over, you know, what everyone was calling a breakdown at 19.5. And I could see it going either way. I'm prepared. If NASDAQ goes to, say 14,300, another 400 points, maybe the SQQ trades $10. It's right now 10.70. Okay. So, you know, I actually hope you're right that there is another blow off. I don't watch it, VXN. And I could take a look at it. I don't want to eat up into the team's times. And these are the kind of answers I was hoping to get from our guest yesterday. You know, I felt like a dentist, you know, I was trying to extract some, you know, ideas or calls. Okay, so there's your VXN. Yeah, it could also be, you know, A, B, C, but I could also see another low possible too. Thank you, Sansi. You're a good trader and you have a good eye, and we all appreciate all the comments from you guys here in Face. And if you like this interaction, like we're having right now with me, you have the whole team to interact with 24/7. All you have to do is become a subscriber. Okay, Terrell? Okay, and you could ask all of these questions you're asking right now, and not just you know, me answering them. You have the whole team in there. You have Amanda, you have Paulie, Blake is in there all the time. Okay, so you're a subscriber. Okay, so Arena, let me ask you this. How's your performance been since you joined Face? How about a live testimonial? Be a good shill and be honest. Be honest. And it's not only your P&L, very good. Okay, so you're doing very good. And how about this is even more important? Are you learning, being around traders that might be at a higher level than you that have been doing it longer? And you're learning, okay? Because a trade comes and goes, but the knowledge and the wisdom and the experience of trading, it stays with you, okay? Both learning. Look, there's another one. Didier, I noticed you're retweeting all of our stuff and the technicals. So, here's a couple people that, they come to Face. They probably started off just like many of you here in Face, and they wanted more. They saw that there was, uh, some, some knowledge and experience and some talent among the team, and they want more than a half an hour of us going over a few ideas, because a lot of things that happen in the market don't happen just because Face is from 8 a.m. to 9 a.m. EST, right? And half of the show is an interview, which is also a way to provide you with some education, maybe even a niche that we don't cover. I have you noticed that we're probably the only company on the net that brings in what most people would consider competitors, and instead we consider it um, edification of our community. And it's because most people are afraid of losing a subscriber. How many other subscription services have had Blake or me or Steve or Grega on to talk about their stuff? It's because, you know, all they're thinking about is their own business. So maybe it's been to our detriment a little bit that, we also think about what helps us have a business, and that's you. And by looking out for you and trying to help you find your way in this very difficult endeavor, we're willing to open you up to some great people. And that I bring in some great people that have been right about a lot of things. Okay. But you need to immerse yourself. And immersion would happen in the chat room and going through our research every day. Who have I convinced? Anyone out there that's not currently a member? Anyone convinced that is going to take a subscription today? You're welcome, Marina. Okay. Oh, great. Okay, thanks, George. You won't regret it. Okay, Didier. So I'm going to bring Blake in now and see what he's thinking pre-Fed. We'll see. Who knows? It's a coin toss with what the Fed's going to
Hey,
do.
good
Right?
morning, Dale.
Hey, bro.
Hey, Irina, you were just mentioning she's been such a great addition to the chat room because she's just very interactive and one of those people that asks questions and
Yeah.
talks. And look, we're all as a community, we're not a this isn't a signal service, it isn't a
No.
buy this, sell that. We talk about the trades that we're in, hey, I'm short some euro up here at 121. I think it's coming back down to channel support towards 120.50, things
Grab
like
the
that.
charts, bro.
Oh yeah, sorry, let me grab
That's all right.
the charts here. But we do we have a lot of conversations like that in the chat rooms, but it isn't, we don't have a signal service. There's that Didier right there, and there's Nidish, and this is just our chat room. We're just discussing what's happening in the markets, and talking about current events. And it's nice to have people like Irina, who's new, and Didier, who's DDA. Did I say that correctly? I'm so bad.
DDA, well done, well done.
Yeah, I know. I should be. If I was French, it'd be different. Anyway, but thank you, Stelios. Um,
I know
but
French.
I guess the point.
Voulez-vous coucher avec moi ce soir?
Ooh, look at you, Dale.
Huh?
I
Do you know what that? Do you know what that means?
You have no idea what it means. You're just repeating what you heard in a movie.
Yeah,
that's what you're doing.
It was a song.
But the point is that we just have it's a great community, and we have a lot of interaction with people, and there are a lot of people that just lurk and they just sit there and they don't say anything, and that's totally fine too, but the thing is, we're all out there sharing ideas, and we just try to keep politics out of it and religion out of it, and just kind of focus on the markets. And every once in a while somebody gets heated about something, but like Boris Johnson modeling his flat, I guess that's what he's in hot water right now.
Yeah.
But there, people were talking about that, actually making fun of more of his clothes. I saw, I got to show you guys this. This is pretty funny. Catherine, who's also in the UK. She actually was one of our winners, but she's also a long-term client and trader in our chat room. She posted that, and I'm like, whoa, that's how he dresses. I had no idea.
Oh, man boobs, come on.
Not just that, but man, look at the shorts and the shoe. I mean, look, I'm a dad, and I get it. I'm like, I got dad style. I got a bit of a dad bod, but man, that's some clashing of colors that it doesn't work for me. I guess it works for him. He's got cool hair though. I mean, what can you say? Anyway, okay, enough about that. Let's talk about the markets ahead of today's FOMC. So this is probably going to be one of the more boring FOMC meetings. I mean, we all know what to expect, right? I mean, let's face it. That's why stocks are where they're at. Stocks are elevated, and we're near our all-time highs because no one's expecting the Fed to do anything or be anything but dovish. That's it. We're going to continue on giving us the same rhetoric. He's going to be dovish. He's going to say there's improvements, but there's risks, and he's not going to set the stage for any type of tapering. He's going to be dovish. You listen to every bank out there, and their research continues to support the idea that the Fed's going to remain dovish. Is there a chance that the Fed is looking at the data right now saying, you know what, it's actually improving quite a bit. Maybe we need to, start preparing the market a little early. Yeah, but that's going to be a surprise. And the surprise would be that they are a little bit more hawkish than the market expects. That is obviously the risk going into today. But if you look at the dollar, and I'm going to reference the dollar really quick. We are in a descending channel, and we have been basically in a descending channel for the last 3 weeks, or since the beginning of April, really, end of March, beginning April, we've been just in this descending channel. I think you have to see a move in the dollar index back above 91.30. Actually, this is probably the level right here, back above 91.30 in order for the dollar index to, recover. Can that happen? Sure. I mean, if Powell is a little bit more hawkish and we start moving the goalposts for a rate hike, in 2023, and people start saying, oh man, maybe there's a chance by the end of, by the first meeting of 2023 that we get a rate hike, or, maybe the taper timeline moves a little closer. Yeah, we could see a little disruption in the equity markets and the dollar index, but the Fed is really good about not surprising the market. And I think in times like these, when there's a lot of uncertainty, the last thing they're going to want to do is rock the boat. Okay. And so you have to expect that everybody's thinking the exact same thing, and the Fed's probably going to deliver. Now, The market reaction, though, that's going to be interesting because everybody's expecting the same thing. It's kind of like I go back to the idea of the end of Christmas or end of around Christmas, about the end of the year, and everybody was looking at the euro dollar, thinking the euro dollar was going to, we were right here, and everybody's thinking, oh, the euro dollar is going to 140 to, next year, first thing, straight away. And, everybody was positioned that way. The euro corrected. And now we're just, consolidating. And I'll come back and talk about the euro here in a second. But I guess the point is everybody's expecting the Fed to act a certain way, which, look, they haven't given us any reason not to. The economic data has improved, but I think the Fed's going to want a couple more jobs reports underneath their belt before they make any type of, definitive, like, hey, things are really improving. And we got a jobs report next Friday. Yeah, next Friday. And we're expecting another, blowout jobs report as jobs come back towards, we continue to
Pre-COVID levels.
Well, we're not there, but we're still building in that direction.
Yeah.
But the one thing that's also positive is that we have in the United States,
A labor shortage.
we have a lot of vaccinations.
Oh.
I don't know what the percentage of the public is, but I think I want to say it's like fully vaccinated, like 25% or 30%, So as that continues to move towards 50% of the population being vaccinated, that's fully vaccinated. That's, I think that's a big benchmark for what the Fed's going to be looking for, is knowing that we're going to be, getting back to some sort of normality. Now, what I would be looking for, like in the euro dollar today, is that we do have channel support. And you can see even overnight, we came back down towards that 120.55. Really important, what I consider now very important support for the market. And resistance is going to be this trend line that capped us from Friday. We talked about that trend line on the week ahead video on Sunday or over the weekend.
Who's we? You and your twin?
Yeah, well, Oh,
you're cloning yourself now, bro?
No. But we
I know, dad joke.
I know it's a bad dad joke. We hit that resistance, it's also the 618 retracement. So yeah, I think really the euro is right now in a pretty tight 60, 70 pip trading range. And I think a move out of this trading range, whether it's to the upside or the downside, is probably going to set the pace for the pair moving forward. So just, probably after today. And keep in mind, we've had a 400 pip rally in the euro dollar this month. It's been a big rally this month. So just, from the lows to the highs. I'm not saying it can't continue. I'm just saying that it's been a pretty damn good run thus far. Now let's talk a little bit about the Canadian dollar, and then I want to turn it over to Steven Stelios here. The Canadian had just been sitting there for 2 days. We're finally breaking through the support. Looks like we're going to attack these lows. We have retail sales coming out here in about 7 minutes. Maybe somebody knows something about something. I'm just going to say that this move here, when we had this false breakout, that was as the BOC rate decision, and people bought the dollar Canadian because they thought that Canada didn't taper, but they indeed did. So as a false news story that came out, it was even on Bloomberg. We reversed, and since then we've slid, and we're closing in on the 161% extension of that entire move, which will come in at 123.50. A strong retail sales here in the next 6 minutes could be the the catalyst that drives us down to maybe brief new lows here, ahead of the FOMC. And one of the things that that Forex Gal pointed out is, yes, the 10-year has been on the rise. The 10-year has been climbing, and it has drug up the yen pairs along with it. And if you use Forex analytics. I'll give you an example here of the 10-year. Just like this is the basic technical analysis that I go through, every evening. And we'd been looking for a rally back from these lows as, we had divergent relative strength back to 133. If you could go back to, we deleted all the analysis every week. If we didn't, this page would just keep going and going and going and going. But every week we kind of take all the week's analysis off and start fresh on Monday. But we were looking for a move to the 133 level in the 10-year, and we basically got there. We were within a sliver of the 10-year, but you can see this channel is holding, and the 10-year is starting to move lower, and that means yields are rising again. And that's one of the things, and one of the catalysts that's driven up not only the 10-year yield, but also the dollar yen has followed as a result. So anyway, those are some of the things that are moving ahead of the FOMC. And Steve and Stelios, I'm sure you guys have some comments about what to expect from the Fed. So I mean, what are you guys thinking here with the FOMC coming up? I mean, you expecting anything crazy?
Good morning. Personally, I'm not expecting anything. The same as everybody. And Powell doesn't really have any incentive to surprise the markets. But I will be looking on the presser I'll be looking at the elephant in the room, which is inflation. And Powell has told us that this is transitory and inflation is going up. I mean, we looked at the commodities chart yesterday, their year-to-date increases, and they're pretty massive. And they will always come through in the prices of goods and services. And inflation is very important because how does the Fed fight inflation? They have to tighten. And with debt going, increasing exponentially, every time they tighten, it's going to be a huge burden. So the Fed, I think we'll see inflation persist. The Fed will probably wait as long as they can. But then they know that if they start tightening, then equities and risk assets are probably going to be going lower. So they really don't want to tighten, but at some point they're going to have to. So my thoughts are going to be on inflation. I'm sure he's going to get asked about it, and what he says.
Lumber sees no sense of inflation.
Yeah, none whatsoever. I mean, incredible, right? Incredible.
Incredible moves, and you can go across the whole commodity complex, but I'll say that even coppers just continues to rally here. Actually, I'll pull it up this way. But yeah, that's definitely worth noting if he changes his tune a little bit on inflationary data, because it is transitory as far as he's concerned. How about you, Steve? What are you thinking right now?
Impressive moves, yes. Incredible, no, not in any sense. I think
moves, yes. What was the second part? What was the second thing you just said?
I don't view them as incredible. It's I think we're still at the beginning. I think incredible is about to come, a little bit later.
Wow. Because for years, lumber traded like between 200 and 400 forever. I was on that floor. So 1900, it never got to 1,000. So I mean, me,
I'm sorry, Dale.
The lumber, Blake, and the other day I was looking at meats. I spent a lot of time on the CME floor.
Yeah.
And I haven't looked at live cattle or hogs or bellies or any of that for a long time. And the prices are just like like the Twilight Zone compared to what they used to be. It's going to be expensive to have a barbecue this summer.
Yeah, I mean, look, I do predominantly the grocery shopping. I enjoy it, actually. It's like an excuse for me to get away from my desk and go into just go out into the world. It's as sad as it is when you're a trader. It's like that's like
your fun.
Story.
We know exactly
what do you do for fun. I go grocery shopping.
I buy potato chips for fun. I mean, it's great, but no, I do. But it's funny. It's funny, but it's not funny. But that's like one of those things that, as a trader, I sit in front of my computer 15 hours a day. It's like, get me out of the house and just go to the grocery store is sometimes fun. But I do recognize the prices are going up substantially. And I was talking to a friend of mine who has nothing to do with the markets. He's in medical sales. We went and played pickleball last night. He was there's like 8 of us playing over at our friend's house, and in his backyard, he's got a pickleball court that was transformed from a tennis court. Anyway, but him and I were talking about inflation, and he's like, he doesn't do anything in the markets. Like, he has his
Guys, by the way,
retirement.
sorry, Canadian data
Oh.
beat by quite a bit.
Okay, so it beat by quite a bit, and I assume, and I told people in the chat room earlier. Let's see. Hold on. Here we are. This Canadian could be sliding his peeps looking for stronger Canadian retail sales, or maybe, just maybe, they know the data already. Because I joke around about that, is Canada gets, I don't know what it is, but man, their data gets leaked all the time. And that's a pretty common knowledge. And, you know, I think maybe you have a situation where people were expecting stronger data. Maybe somebody knew. We slid through support, probably shook out a few, you know, longs. And then, you know, now that the data's out, it just kind of bounced back. I know you have I guess the point is, and I know, Dale, you've got an interview. I just want to say that I was talking to my friend yesterday, and like I said, he has nothing. He knows nothing about. He's not an investor. He's very wealthy, but he's more of he's a sales guy for medical sales, so he does really well. He's very charismatic, so, you know, but he doesn't really think much about like the markets. But he was even mentioning to me, as my passenger in my vehicle, he was like, he goes, man, and you know, he started talking about house prices and inflation, and, you know, people getting priced out of the market. And I'm like, wow, you know, I never expected to have that conversation with that particular person, but that means it's on everybody's mind, you know, those types of things. So that's what it just represents to me. Anyway, guys and gals, if you want to be part of the Forex Analytics family, and you're outside of the US or Canada, open a Pepperstone account, because then this way you can get Forex Analytics for free for a few months. You have to use this link right here. I'm actually speaking to Chris Weston from, he's the head of research for Pepperstone Securities. We're going to do a post FOMC analysis on Thursday afternoon, Friday morning his time. We're going to record something for the Forex Analytics family. So be there for that. And then also visit Forest Park FX. They are one of our webinar sponsors, and they're like the concierge of Forex brokers around the world. And they are awesome. We've been working with them for ages and eons and neons and years and days. And anyway, Dale, it's all yours. I'm done.
Thank you, Blake.
Thanks.
I'm looking for Alejandro. Are you there, buddy? I don't see you in the crowd. Steve, can you help me? You see Zambrano. Alejandro Zambrano is our guest today.
No, I don't.
Huh.
Although we do have one phone call listener, so I have no way to know if that's him.
Huh. Okay. All right.
If you can ping him somewhere to tell you if he's the phone call listener.
I did. I pinged him, you know, about 5 minutes ago.
Well, you know, if he's not here, maybe Dale, you can work and work around, see if you can find him in the list, or maybe reach out to him. And
no, he's not in the list for sure. I searched with the first name, with the last name, but we do have one person calling in, so I don't know if that might be him. Although we've had him in the past and he didn't call in, because I remember he was screen sharing and all, so he's done it before. And if he's calling in, he can't share his screen. That's the only sure thing.
So I would just assume if he's not here, and I have let everyone know at the new interview time, I would assume that he may not be here. And if you guys want to use the time, Steve, you know, haven't heard one of your updates in a long time. I mean, the face people.
You know, I was going to say, Steve and Stelios, you know, the listeners, they heard me ramble about the Fed and, you know, what to expect today, what my feelings are. How about your feelings and what you guys are? I say feelings. Good.
Hey, you don't want to hear my feelings about the Fed.
Feelings, nothing more than feelings.
How are you feeling today? Would you guys like to sit down and
touchy-feely? Yeah.
All right. Oh no,
Uh,
but seriously, like, what are you guys have some opinions about what I know, Stelios, you got to voice some of your opinions. How about you, Steve? And I'm going to let you take over the screen here, and maybe you can talk a little bit about what your expectations might be of the Fed today.
yeah, and how you're going to trade it.
I have no intentions of trading it. I have no different expectations than the usual, meaning they will be as dovish as they can be. I've kept saying for a long time that they will be looking the other way and will be ignoring all the obvious signals of inflation for as long as they possibly can, because the alternative requires them to completely derail the phony economic recovery, because it's purely based on easy monetary policy and
Where do you think the 10-year should be, Steve, if they were playing the game straight? 3%, 4%?
currently
Yeah.
above 7-8%,
Oh, wow. Okay.
because it would have to price in real inflation. Because let me reiterate, I'm answering to the question that said if they played it straight.
Yeah.
Playing it straight requires A, to report real inflation,
Okay.
B, not to monetize your debt. So keeping pricing out investors that are willing to buy debt just because they know that there is another entity willing to buy it off their hands. So in essence, having to reprice default and inflation risks above 7-8%.
Okay.
But of
And
course,
where would
there is
fair
no
value
science.
be? Where would fair value be in the S&P if we were playing it straight?
Nobody can answer that, because if we were playing it straight, the problems would have never reached the point that they've already reached, because playing it straight would require them to take measures long before we got to the point that we currently are. So who knows? We're talking now about an alternative reality, right? Which we don't have. A lot lower, but not as low as many people might think, because if we were playing it straight, we would have much healthier real economies. You know what I mean?
Okay.
A lot lower, though, because one of the basic and more important pillars of the phony economic recovery is asset prices. As simple as
Right.
that. So you get the wheels of that bus, and everything goes to hell in a handbasket.
I'm also interested in your view on crude. We've had a nice little pop
Higher.
here. Okay, so higher.
Higher.
All right.
You don't have to ask me about things that have intrinsic value. Everything will go higher. Now the question
Okay.
is, does it go higher straight from here? I'm not sure yet, because there are a couple of interpretations here. One,
Let's see your screen.
I am sharing my screen.
Oh, okay. I'm sorry. I'm on my screen. I'm seeing that.
There are a couple of interpretations here. One, that we've already broken out from this consolidation.
Yeah.
An alternative interpretation is that the consolidation is this symmetrical triangle that I'm showing, in which case we're currently testing resistance. Alternative interpretation, third interpretation, we had one leg lower. We've had a rebound in a corrective manner. We need one more leg lower and then higher. So the question in my mind is not if we're going higher over time. The answer is very simple. Yes, we're going higher. The question that is still alive in my mind is, have we bottomed out in this consolidation yet or not? And I'm not sure about it, not yet. If we break through this previous high and we see some momentum, then I'm going to be more confident in saying that we found the bottom there. Alternatively, we might see a move towards 54, worst case scenario. I would say towards 50 and a half, worst case scenario, and then higher. But we're headed higher. As with anything that has intrinsic value measured in fiat currency terms, especially the dollar, because I've been saying that for years, and you know it very well. If there is one currency I'm overly bearish, is the dollar.
Okay. It's great to hear you. Stel, you have anything to add to that? I don't know if Blake is still around.
I'm not sure that Stel is here. Probably he
okay,
thought that
so,
we're going to the interview, so
I'm still
he tuned
I'm
out.
still
Oh,
here. I'm
okay.
just yeah, I'm just listening in.
All right, well,
What I said yesterday to our Morning Edge audience, though, and is worth mentioning today. I warned yesterday, looking at this 4-hour 10-year yield chart,
Yeah.
and the daily. I told them that I think there is a very, very good chance that yields have
Are gonna-
already run their corrective path.
yeah,
And if that's the case, which it seems to be the case, that would mean that there is a very good chance that USD yen bottomed out there
So,
at the
so Steve,
38.2.
if I know you have a pretty bearish view on the U.S. dollar,
Mhm.
if yields are moving higher,
Mm-hmm.
and you feel that yields are going to be, you know, the catalyst that you know really drives the market higher, it's in my opinion, it's hard to be a dollar bear when you
Why?
have yields rallying like that.
Why? Nominal yields don't matter, never did.
If it matters a lot to the yen, and if the yen starts moving higher, the dollar yen starts moving higher.
It does. And I do believe that the yen is one of the currencies that might actually do bad against the dollar, but probably one of the very, very, very few ones.
Okay. All right.
Having to do with the rest of the mainstream currencies, I think they're going to do, they'll continue to do good, very well against the dollar. Now, I think it's more than obvious that the market doesn't care that much having to do with nominal yields, because the market has clearly started realizing that the increase in yields is minuscule in comparison to the actual underlying inflation that's coming through the market. So in real terms, I think that the somewhat of a rebound we've seen in nominal yields is not good enough, not even close of being good enough to counter the increase in prices. So I think yes, yields might keep on creeping higher, but so far, for example, first quarter of 2021, in annualized terms, if we assume that we don't see inflation decelerating, but also if we assume that we don't see inflation accelerating, so you can say it's a normal scenario, not a good one, not a bad one, we have something like 12% annualized inflation. So if inflation continues in the path it has been during the first quarter, we're looking at about above 10% inflation, and that's in the terms they measure it, which are rigged. We can have a conversation how rigged they are, but rigged in any case.
I can remember in 1987, Steve, the dollar was selling off with yields going up.
Yeah, of
that
course, it
led
can happen
to the
again.
crash. It led to
course.
the crash.
It can
The
happen
weak
again.
dollar and
easily.
higher yields. Yeah.
Yeah, it can happen again easily. I don't believe that you're going to see easily yields explode higher. The Fed so far this year has bought 84% of all bond issuance, and
What
that's
a good
the
customer.
yeah, and that the fun part is that at the same time, when asked, Powell claims that there is healthy demand for US debt. Now, how can you combine the two together? How can there be healthy demand for US debt, but 84% of it being absorbed by its own central bank? You go ahead and answer that question for me, because one of the two is not true. You know what I mean? You either don't have healthy demand for US debt, or I'm lying and the Fed hasn't absorbed 84% of the US debt. You
I
go
tell
ahead
you
and
what,
figure it out.
Alejandro is here now.
Oh yeah, good. So you can
All
go
right,
ahead and start.
it's going to have to be a little abbreviated, but let's get his take on.
Okay, you can take the extra 15 minutes we have.
Okay.
Before the morning edge starts, at least like 10 of them.
Okay.
So it's okay.
Better late.
Enjoy the
than
interview.
Never. Thank you, Steve. Hi, Alejandro. How are you?
Good. How you
Good.
doing?
Good. A little confusion about the old time and the new time.
Actually, I was caught up with another meeting.
Okay.
And yeah, I'm sorry about that.
That's okay.
Yeah.
All right, so welcome back to Face. What's on your radar? Why don't you share your screen with us and what are your expectations from the Fed today, buddy?
Okay. Let's see. I'll start to share my screen.
Because we know about your journey.
Yep.
You're
That
no
was
longer a rookie on Face. You're a veteran.
Yeah, you're right. And thank
Okay.
you for that. Thank you for having me on last time. And again, sorry, apologize, guys, to keep you guys waiting.
It's okay. We're all
So,
human here.
so just in general, like, unfortunately, the way I see things happening is that I think markets are going to be continue to be a bit more boring, really. Just no really particular strong trends, and I don't necessarily think the Fed is going to make any major changes. Now, for me, it was
Okay.
a bit of a surprise what happened in Canada last week, and that they're going to start
Yeah.
tapering. So that
The
was a big
first taper.
yeah. So that was definitely a bit of a surprise, and maybe the Canadians now leading the way. There's also talks, what's going to happen with the Bank of England by the end of the year when their QE program is supposed to end. So there's definitely some spots where we can see some.
Norway.
Sorry.
I think it was when I talked to Mark Chandler, he said Canada and Norway were his candidates for being the first to taper.
Yeah,
So
definitely. Yeah, I mean Norway has, it's done really, really good.
mhm. So
With
what do you mean by boring though, Alejandro? But
compare with
compared
last
to
year.
what?
Compare
Compared
with
to
last year.
Bitcoin?
No, compare with last year actually.
Oh, okay. All
Yeah,
right.
because it's interesting, like last year, you had a lot of new people coming to the market, and as well, it's relatively straightforward to trade. I think last year I had a really good year, both in normal markets like traditional forex, stock indices, and commodities. And then by the year we had cryptos as well, which sort of made it super interesting. But now what I notice, at least from if you think about it, like Euro USD, it hasn't really done too much recently, right? So I think if you look at it, it's sort of been trading sideways. Well, technically, we've been at the same level since August last year. So I think one needs to be quite picky and sort of just strategy wise. I think one needs to be quite picky with the setups that you trade. And in my specific case, I'm thinking of, let me load a different set of pairs charts actually. I'm looking things more like I'm actually long the Norwegian kroner. So uh, you have some ideas, something like this. So this is, for example, dollar Norwegian kroner. This is the daily chart. We're
Okay.
actually shorted already here on April 6th, sorry, April 20th, I think it was. Just based on this rectangle pattern where I'm looking for this to go down with about 3.5%.
What 803?
Yes, that's correct. 803.
Mhm.
But at one point, it looked like I was gonna be stopped out. And then you have as well things, other stuff on trading. This is dollar to African rand, where I started out with a stop up here around 1453, and I actually lowered this one right now here. But I actually been short here already since April 15th, and here I'm basing it on this big kind of descending triangle. I know these lows are not exactly aligned, but they sort of go in the same way. And we have the general theme. So the general theme, as you know, higher stock markets, more risk on, strong company earnings reports, strong GDP. So everything sort of the economy being pro growth or growing quite quickly. And that is lending some support to these exotic currencies like the South African rand, but we also have the Norwegian kroner, which you mentioned as well.
Okay. You think continued risk on? You have any view in elevated views and elevated levels in stock indices? And have you noticed NASDAQ, which led the way up, has been faltering or has turned into the relative weakness compared to the S&Ps, and the Russell hasn't made a new high in a while? Or are you mainly just focused on currencies here? I
No, no,
figured if
you're
you were
right.
getting
No,
bored, you were probably looking around
no,
at
you're right.
other things.
No, you're right. I focus on all markets, so I do
Okay.
like analysis on them every day.
Yeah.
So I mean, if you, I didn't put any channel analysis or nothing like that, but if I would have done that, I guess we would be close to the upper ends of that channel. So it's definitely not like a spot to be like really bullish. I think the last time I turned bullish was here when we had this small inverse in the shoulders with a head left and a right shoulder, like
Mhm.
that point here, and that went well. And I'm looking for this to continue to go higher because the markets, when we are in the situation when they're printing so much money, there's like a greed in people, and people just want to buy and buy and buy.
Yeah,
And you have a lot of these rookies, they don't understand reward ratios, they just see higher prices and they want to be buying. So
I
I'm
love your
banking.
charts, by the way, Alejandro.
Thank you.
I think you're an excellent technician, and you know what I love about them? They're so clean and simple, and at the same time compelling because of the levels that you show. Really nice stuff.
Thank
So
you.
you're allowing the Nasdaq to pull back here, maybe 100 points or so before making a move towards 14.2 or 3. Would we have to close under, say, 13.7 for you to get negative? Would
That's
that do it?
correct. That's correct.
Okay.
So what I've been
Uh,
doing here, I usually do, I just go with the trend.
yeah.
So up until recently, we said buy here and went up, then buy here went up. And what's quite interesting here, this is transforming into, I guess, a bit of a. I mean, people say you can't look for these you can't look for the inverse head and shoulders at the top, but I don't
Yeah.
really care too much about that. For me, this is a bit of a left shoulder, maybe right shoulder
Maybe
creating.
it's a cup and handle. Something like
That's exactly, yeah. And I'm
uh,
actually long some other stuff. So what I did buy.
I usually have those debates, Alejandro, that,
Mhm.
head and shoulders, tops and bottoms happen at the top or the bottom, but I forgot who it was who wrote about them as continuation formations, and I've seen them work as
Yeah, that's
continuation.
true.
You
They
can't
do.
be rigid, I mean, I would say, well, Edwards and McGee says they have to happen at the top and the
Yeah,
bottom, but you know what? They wrote that 60 years ago.
yeah, I
So,
agree.
you got to change with the times, bro.
Exactly. I mean, one we should always marry, I think, the technicals with sort of the fundamental reality we're in.
Yeah.
And there is this Swedish money manager I follow. He does a lot of quantitative work, and
Yeah.
he's been telling, look, the we're gonna beat expectations. We're gonna beat expectations. And he's been saying that for like a year, and his models continue to say the same. And we are in that mode where we have these positive surprises, and with that, with the trend, and with all the excessive liquidity we have, if we have something like this, then there's nothing wrong with trading this, I think.
Right.
um,
Let me ask you your thoughts, backed up by, a lot of people's talk about inflation. The grains have become parabolic. Lumber has become parabolic. The commodity markets, most are on fire,
yeah,
except for maybe gold and silver, copper, the industrial metals. Do you think, are you in the camp? A lot of people are saying that this is the beginning of a super cycle in commodities, or is this just a cyclical advance rather than a secular advance? What do you think?
I don't think it's a secular advance at all.
Okay,
No, I don't
uh,
think so.
why?
I think we're just catching, like, it's the same way as people panicked on the way down on the pandemic. They're
Yeah,
planning on the way up right now. And yeah, I mean, obviously you have low interest rates, economy will be strong. It's probably gonna be strong. It's been for a long time. But then I think if you fast forward a year or two from now, they're gonna start to moderate, like raise interest rates, remove the QE, and then that's just gonna take the air out from the system. And probably a lot of these metals now, they're front running that. But maybe like a year from now, I'm not saying they're gonna just rally for a year from now, but ultimately I think there's gonna be a cap on that. uh, so I don't foresee it. It definitely doesn't feel like when did we have this last time? 2008 or something, or 2009?
inflation like this.
No, but just the
Yeah,
good times, the good times.
we haven't seen moves in grains like this in probably 40 years, and these are historical. And you know what? You could raise the Fed funds rate to 10%, and it doesn't mean that the
Yeah.
soybean and corn and wheat market are going to come down. You can't print grain.
Yeah. So I don't really follow the soft
And it
commodities.
takes a while for a tree to grow,
Yes,
for
I don't
lumber
really follow the
prices to
soft
come down.
commodities,
Yeah.
but it doesn't feel like 2007 when I remember very well, the parties and all of that we used to
Yeah.
have in 2007, 2008. I remember it used to be like crowded, like proper crowded. Like I haven't experienced times like anything like that since then, really. Like the heydays like we had back then. And that's when we can genuinely say, oh, China was growing, US is growing, Europe is growing, everybody was
Yeah.
growing. So then you need all these resources. I don't
That's
feel we are there right now.
okay.
Yeah.
All right. Yeah. I'm open to, you have to prepare for everything and anything, don't you,
Yeah, I mean,
Alejandro, in these markets?
the thing is this though, is that, you know, you have these fundamental things, they sort of kickstart something. So we have all these QE and cutting interest rates, all that cuts. And then now you have that plus the idea that we're going to go back to work and whatnot. So we are in this pro growth environment now. And that's why, you had until recently cryptos doing really, really well, even though Bitcoin sort of has been trading sideways really since, Bitcoin has been trading sideways here since, what is it, February 18th.
Yeah.
So I think one just needs to ride that. Uh, and if one is savvy, for example, follows your analysis or follows my analysis, and you imply and you actually use stop loss orders to try to ride the thing for as long as possible, then you can make money on that. Uh, and the other
What do you
problem,
make out of a doggy coin
oh yeah,
that was made to be a joke?
I know. I
So,
think,
I mean, isn't that emblematic of feverish
yeah, definitely.
speculation?
Yeah, look at this coin market cap. This is the coin. This is Binance coin. So
Yeah.
I have an account with them as well.
Yeah.
This is a coin. You only use this coin to get lower transaction fees when you're trading with them. So you can choose to pay in dollars, but I think you get like 15% off or 10% off if you have Binance coin. So the fact that their coin is there at that level just shows you that it's just driven by speculators,
Yeah.
because people think that we're going to be at a much better place than 5 years from now, or maybe even 10 years from now. So it's just speculators right now to some extent. And and ultimately I think we're going to go maybe where these long-term holders think we're going to go. I think that could easily happen, but until we reach that level, which is probably going to be within 5 years from now, you can easily have a 90% slide again in some of these cryptos.
Yeah.
Well, maybe not 90, but maybe like 75, 60.
Yeah.
That could
Okay.
easily. So I do foresee another like 2-3 year bear market in cryptos. But right now, everybody's sort of enjoying the ride, and me too. So we're just trying to go with that for as long as possible.
Okay, great. And that's one of the most difficult things to do, what you're just saying here. I mean, I kind of grade it this way. It's excellent to make a great forecast where,
Mhm.
you said it was a sell here and it was the objective here and you risk that. That's great. It's even better when you execute the trade. And the toughest thing is a great hold.
Yeah.
So why don't you share with our audience here what you tell yourself to stay with a trade instead of booking profits, and why you're willing to sacrifice some profits for longer term gains? What's your self-talk, Alejandro,
It's
on
a
a
good
trade like
point.
that?
Um, how can I?
How do you do it?
All I
Do you
know is
walk
this.
away? Do you manage it from a longer term time frame? Do you just have that paradigm within yourself that you can do it? Because when Bitcoin was trading 60,000,
Yeah.
I kind of thought that you either had to be, especially if you bought it well, like last year. I did GBTC, but I just
Mm.
took a short-term gain on it and never recommitted. I was saying that if you rode Bitcoin all the way up to 60,000, and maybe I'm wrong, that you almost had to be either naive or greedy to still be long. How do you not take profit? Say you bought it at 14 and it goes to 35.
Okay, no, so I don't do that. I don't do that really. Uh, I just stick with the patterns I have, and then most of the time, the patterns like would tell me, okay, there's a 30% upside, a 40% upside, and then I would actually get out. So I bought some stuff. I mean, if I would have just held on to everything in the crypto space that I bought, like in the beginning of this year, or even end of last year, I would have probably done like 400% now. But I didn't do that. So what I did is that I traded one coin, and then maybe went out with 25%. And then I said the risk reward ratio here is not good anymore. Plus, I reached my target, and then I would book that, and then I would jump on another good risk reward ratio position, and I would um, trade that one, and then maybe that would go up with 15%, and then I would book profits. So I would do like that all the time. But
Okay.
obviously, with the benefit of hindsight, I should have just kept some of these coins, and I would have done 400%.
Yeah,
But
I know. It's
it-
hard to do. That's why a great hold, you know. Anyway, why don't you show
this, though, I don't
people?
think one should beat
Go ahead.
oneself up too much for that, because you know, if you compare with everybody else, the buy and holders on stock markets, which is where most people have their money anyway, the challenge there is just to do like 9% per year, 10% per year. And then I think there's this illusion that, yeah, people make a lot of money, but I have a suspicion that most people who trade cryptos, they start with just 500, maybe $500 at most.
Mhm.
And then that's it. There are some people, of course, like on the Binance platform, you can see how other people are trading, and you're gonna see a few people that are trading with millions, but there's not like huge of them. So
It's wild, wild west. Those spreads are tough too, aren't they?
I think the slippage is the hardest thing.
The slippage? Yeah.
Yeah.
Uh-huh.
This is actually a horror story, but apparently, I don't want to talk down about the exchange, but the exchange, what happens there is that the price. So there was one guy, apparently he was holding like 4 different assets, and he was trading that on leverage. And he didn't have extreme leverage on any of them, apparently. But on one, the liquidity dried up so much when the price spiked just a few weeks ago. So the thing went from like $1.2 to almost zero. And then they closed him out at the lows. And
Oh,
that, because there was such a huge loss there, they had to liquidate his whole portfolio.
oh boy.
Yeah. So
Yeah. Huh. Yeah. Yeah. Be careful on these exchanges. They're not regulated yet.
No, it's true.
Yeah. So, don't leave a lot of money in your account in those either.
Yeah. Yeah. No,
Anyway, so,
yeah.
that's my advice. So, Alejandro, I have some great ideas that you provided us today,
Yeah.
and I'm sure some people that are here live and watch a video later would like to know how they could reach you and get a hold of you if you want to show your website now.
Yeah, sure. So my website is this one, Londinium FX.
I love your demeanor is great. Are you as calm inside as your presentation is when you're talking about markets, or
No.
that's great, man. All
No,
right.
I'm not. Like, I mean, well, I'm obviously, you learn, right? You learn,
Yeah,
you have
yeah,
to battle it,
yeah.
and sometimes, but I've done it for so long now, so it doesn't. It definitely affects me a bit sometimes, when you have bad days and stuff. But usually, I just go to bed, and then when I wake up in the morning, I sort of forgot what happened.
Yeah, good. Yeah,
So that's a good ability. And another good thing I recommend people is just to maybe try to exercise, even if it's just for 15 minutes.
yeah,
Because when you run, like, you have the endorphins and adrenaline
right.
and things like that in your blood. So when you run, scientifically it's shown that that's something that can reduce all of that. So that's another good way.
I have one
Alejandro, if you give me your back, I will start running today. I promise.
My back? What do you mean?
Yes. Mine doesn't work. That's why I'm asking for yours, because it obviously does.
Oh,
he
okay,
misses
yeah.
running. Yeah.
I
I've
can
one
use my
for you.
barbells, like my dumbbells. You can exercise
Yeah.
your arms, maybe. I don't know how it works.
I have one for you, Alejandro. Find something you're grateful for
Yeah,
after your trade. So maybe a bad trade, but why not say, you know what? Most people don't even have the opportunity to take a risk like I do.
yeah, you're right. Yeah,
Huh?
you're
How
right.
about that?
Yeah, that's a good one,
So,
actually.
yeah. So anyway, you may want to get a hold of the team for something that's coming up with us to contribute. And I want to thank you for being here. You're now my transparent trading warrior brother, who presents a detached view of the markets, but still feels butterflies after all these years. What a great answer! Thank you so much for making it, and better late than never,
Yeah.
Alejandro. Yeah,
Thanks a
thank you
lot.
very much, buddy.
Cool, thank you. Can
And
I
we'll
send the
we'll
link
watch.
to
Go
all
ahead. What?
attendees here, or is it okay if I send the links here in the chat?
Sure, go ahead.
Cool. I'll also share my Twitter. I'm not so busy on Twitter anymore,
Okay.
but I still post a bit.
It seems to have slowed down Twitter. Like it doesn't seem to. I don't know.
No, you're right. Like
Doesn't feel that way to you?
yeah, you're right. People they don't. There's a few
Where are they
people there,
going
of course,
now,
to get a lot of clicks, right? But I don't know. It's a bit difficult. Yeah, I agree. It's not like before,
Yeah.
So I'm focusing
It's
more
all
on
COVID's fault.
yeah. I'm more in the background now more than anything else.
Yeah.
So I guess I told you guys before I managed. This is just a news website, by the way. So I'm doing more stuff like that. I trade my own account and I do this, but I don't go too much on Twitter
Okay.
anymore. I go on
Okay.
Twitter, of course, to find the mood, read stuff that people are publishing, but I don't publish too much anymore.
Well, I'm glad you used to. That's how I found you.
Yeah,
So,
definitely. Yeah.
so don't completely discount it. Although there's only one of me out there
Yeah.
inviting people on Twitter to be part of this. So I really appreciate you being here today, Alejandro, and I hope all your trades are green. And
Hope so
really
too.
thank you for making me laugh today and being, completely open about that. I don't care how many years you're doing it and how you say you're detached. We're not
Yeah.
detached,
Yeah, I think the trick is so for most people, what has to happen, you just need to go through. You just need to obviously, you need to find a system that works. And if I tried to do the short-term stuff for many years and didn't work out for me. So then I started to work on the bigger picture charts, 4 hour and
Yeah.
daily. And then
Yeah.
what I also noticed that when I was doing good, when I was trading short-term, it's just because there was a signal on the daily. So then I said to myself, well, why bother to do short-term when I can just do daily in 4 hour? And then I've been sticking with this since 2000, I think 16, I think it is 14, sorry. And then I just realized that, if I just trade on the big setups like the one I was showing you guys here,
Yeah.
I'm not going to have all winning years, but when I win really big. So last year, I think I did about 144% return. This year, I'm up with about 32%. And so you just need to stick with it afterwards. A lot of people I meet, they don't have patience.
Yeah. And you had to be patient to realize that.
Exactly.
And
Yeah.
you had to go through the pain of, up, down, up, down, up, down, short term to make that realization. It took time. And, it really, people say, one of my favorite quotes for me is, the secret to trading is there is none.
Did you say
It's
one of your favorite secrets from you? Did
one
I
of my
hear right?
favorite sayings
Oh,
is
okay.
there is no secret.
Oh, yeah.
It's living through adversity. And, if you can't do that, find something else to do.
It's what they say. There are a lot of ways to skin a cat. I've seen people
Yeah.
that are very
Yeah.
successful in trading like tick charts. I've seen
Yeah.
people that are very successful trading long-term themes.
Yeah.
The most
You're right,
important
Steve.
thing,
There are.
yeah, the most important thing is for somebody to find what they're good at and stick to it,
And that takes
persist
time.
and persist. And it
Yeah.
takes time, exactly.
It takes
So-
time. And that's what Jack Schwager said. Find
So
a
the-
trading style that suits
exactly.
your personality.
So the
You
first
know.
thing that somebody has to do is abolish the dream that they can become millionaires overnight, just
Yeah.
by starting trading.
But if you would, but imagine you both get like you get 5 people you need to educate, or you have like a cousin or like a nephew, whatever, you want to show them how to trade. What are you going to tell them? Stick on the 5 minute, or are you going to tell them stick on the 4 hour?
4 hour.
Depends on who you're asking. I mean, there are people that are like, diehard scalpers. They might say,
If I owned a brokerage firm, I'd say trade the tick
yeah, for
chart.
sure.
Yeah.
Huh?
Yeah.
Trade the
Yeah.
tick. Every
Yeah.
tick.
Yeah.
Trade every tick.
And I used to work for a broker, right? I used to work for FXCM.
For FXM, yes.
Yeah, and there's a reason why, like even on TradingView and it's not TradingView, Trading Central, and all the different services, they always start with the 5 minute or a very small chart
Yeah.
because they want you to trade a lot, and that's how they make their
Right.
money.
Of course.
Yeah.
Commissions.
Exactly. So they don't want to tell you like, oh, I trade with the bigger chart because then
Right.
they're not going to make as much money.
Yeah.
I personally think that trading with the bigger picture chart is usually easier for people. If you can master the big picture, then you can go short term. And if you have tried maybe for 2-3 years trying to do things short term, you kept your journal, whatever, you did good, you did do bad, blah blah, and you still didn't make it, try to trade maybe with the same system on the bigger picture chart and see how that would have worked, or do a bit more back testing, like not just by looking visually at the charts, then you can see the difference there.
Some mentoring from Alejandro Zambrano. Thank you
Yeah,
so much today, buddy.
Yeah, you're welcome.
Thank you,
Appreciate-
Alejandro.
Yeah. And Steve, you may want to get a hold of him for one of your projects. So, guys, you could join the rest of the team. The Morning Edge starts in 4 minutes. I want to wish everyone good fortune during the presser and the Fed today. And remember, most of all, no matter what you're trading, don't just count your pips, count your blessings, and we'll see you in face tomorrow. Thank you, Steve. Thank you, Alejandro.
Thank you.
Adios.
Adios.
Bye-bye.
Bye.